Hello, everyone. This is Candace-Marie Mitcham with Berkshire Hathaway Home Services, Silverhawk Realty, East Idaho and Idaho Falls. And today you are joining me for the Lending Lounge. Today we're going to talk with Mike Morrison of Movement Mortgage, and we have 3 hot topics to share with you. So as always, the hot burning question, what are the mortgage interest rates today? Also, we're going to talk about the beauty of getting pre-approved, starting that process. It's not as scary as you think. And also, Mike is bringing some good news to the table, that interest rate write-off on your taxes. It's back. Stay tuned. Thanks for joining us again. And Mike, as always, thank you for joining me on the Lending Lounge. What do we have to talk about today?
This has been really fun. Yeah. So, well, let's hit on the big topic of the day, right? Interest rates. That's the topic every week. I guess I'm happy to say that we kind of stayed status quo for last week, right? Which is a nice change from many weeks before that, where we continued to be worse. So basically pretty close to 8%, kind of a high 7s, average type of thing. Some scenarios could be lower than that. Some could be higher. We have a big day coming up on Wednesday. We're really hoping the Federal Reserve helps us out with no raise, and also some future language that indicates they might be done with raises. So we'll see what we get on midday on Wednesday.
Awesome. And, I was just watching a report earlier today doing my research. And what I was seeing is that, where our averages year over year long term is 6 to 7%. So being at 8.5%, somewhere there isn't so astronomical. Of course, we don't love it, but is not so far outside the realm of where we would typically be. Meanwhile, back when we're talking about the 70s and before, you could be up as high as 16%, 18%, 20%, and people are still buying and selling real estate.
Yeah. It can be done. Obviously, we'd enjoy this much more if the rates were lower, and we do think they are going to go lower in the next few years.
Yeah. All right. Well, let's talk about pre-approval, because I'll tell you, one of the things that people tend to get leery of in my interactions with clients or potential clients is saying, oh, I'm not going to be ready to buy for a year. I don't know about that. And you really hear, there's no other better way to say it, but a little sense of fear, right, in their voice. And when I'm able to kind of peel back the layers, it's, I have something in my credit report, or maybe this isn't so great. There's a little skeleton in the closet. Well, what I tend to see is it's about 20-30% of folks that come to the table need a little extra guidance, maybe something to kind of work through. So it's not uncommon for us to run across folks that have something like that. Now, with that said, let's talk about why we want to face that fear and get pre-approved or have that conversation early.
Yeah. Well, basically, there's really no harm in ever doing a pre-approval. There's no cost to it, right? So it doesn't cost the person anything at all. And best case, they're approved, right? They find out some good news. Then it's purely up to them to decide if they want to buy, right? They don't have to go buy, but they could if they want to, right? That's a very good position to be in. But worst case, let's say you are, credit's off a little bit. There's something else in your scenario that's just not allowing you to be a pre-approved. Hey, no harm done, right? At least now you know why you're not approved. And we can now focus on that. We can improve that situation and make sure that the next time we try this, whether it's in a week or a month or a year or whenever, that you're going to be in a better position. You're going to be ready to go. Because otherwise people, they just don't know what to work on, right? Is it credit? Is it their income? Do they need to reduce debt? Do they need to save money? There's so many different things. And honestly, we give people that guidance. It's not a big deal. You're not wasting our time. We want to help you get in a better position. Because if we don't do anything and you're not approved today, then you're still not going to be approved many months or years from now. And that's not good.
Well, and I think having that tour guide, as I like to call it, on that journey with you is so important, because people try to do the right things. I've heard stories where folks have said, hey, I paid off this credit card and I shut it down.
Yeah.
Don't do that. You still want to show that you have available credit, right? So there's different steps and tactics to be taken. And so it's really good to take somebody who's experienced in this field along with you to really advise you on what you're thinking you should be doing is correct, or if there's a better way to approach it, right? So you don't inadvertently step on your own foot. Yeah.
Improving your situation, working on credit, things like that. It's not a one size fits all. So we definitely want to give people that guidance. And the more we know about somebody when we go through that pre-approval, the better we can provide that guidance. It's like a doctor, right? You go for a broken arm, you don't want to get, crutches, right?
Yeah.
So you need something specific for your arm.
So. Yeah. And same thing, just like doctors, they've seen it all. So don't worry about it. Just tell your lending professional and they'll be able to guide you through it.
Yeah.
All right. Awesome. Well, thanks for sharing that. Hopefully we've put some fears aside for some folks. All right, Mike. So one of the things that we touched on briefly in our conversation earlier today is the tax write-off for your mortgage interest that folks are paying. Now, this kind of went away for a little bit and now it's
Good.
back. So share the details and educate everybody on what that looks like now.
Yeah, so two things changed in the last decade. First, Trump had changed some of the tax rules, so he increased the standard deduction. That was overall a good thing. That helped people with their taxes. And then interest rates, right? They plummeted, as we all know. We'd love to have those rates back. But you know, when you've got a high standard deduction and you've got a mortgage with a 2 or 3% rate, that just means that the mortgage interest that you have on your 1098 at the end of the year is going to be very small. It's usually much lower than the standard deduction. And so it doesn't make sense to what's called itemize your taxes. But that is changing now, right? If you now have a $400,000 loan with a rate that, let's just say it was 8% today, that's going to equate to approximately $32,000 on a 1098 at the end of the year. $32,000 compares much more favorably to a $27,000 standard deduction for a couple or a $13,500 deduction for a single person. Right? So if you take that 1098 that you get with the 32,000 on there, you wrap in some taxes and maybe some other things in your life that are going to be itemizable expenses per the IRS, you can dramatically reduce the taxes owed, create either a lower tax burden or really increase your refund, right? And we're talking the tune of many thousands of dollars. Now, you always need to talk to your tax professional, right? We are not giving tax advice. But what people need to know is that the mortgage write-off is back, right, with these rates. And this could save a tremendous amount of money for people. If you save, say, $6,000 on your taxes, right, when you file, divide that by 12, that's $500 a month. Really, you can look at your mortgage payment on that house as being $500 a month lower in that case. So this is something that people that really need to think about, and you don't need to be a tremendously high income earner for this to make a big, big difference in what you do. So, you know, please call us for more details, talk to your tax professionals for more details, but this is a big deal. And this is a huge benefit now of buying a home.
Yeah. And I mean, that's really where it comes down to having the trifecta, right? So you want to have an amazing lender who's going to be able to tell you what programs are out there, take a look at everything and find the best fit, because it's not one size fits all. And then you're going to want to have that tax professional that you mentioned, right? And let them know how it applies to their situation and give them the correct financial guidance. And then when you're ready to go and you're feeling good about that and you got safe numbers to work with, that's when you call me or somebody like me and we go out and we go house hunting, right?
You summarized that very, very well.
All right. Well, as always, thank you for bringing that information. I love all the hot topics that you bring to the table for us.
You're welcome.
Any other things that you want to share with us today from the lending world? Any common questions or interesting things that cropped up since we talked to you last?
You know, I think we've covered some good stuff today, but yeah, really people who are thinking about buying a home should really consider the mortgage interest write-off, because it could save them well, not tens of thousands, but thousands of dollars on their taxes. Yeah.
Awesome. Okay. And for folks that are interested in broaching this subject with a lending professional and they want to talk to the best, so they're going to call you, tell us again, one, how to get a hold of you, even though I'll link it below, and also where you can assist, what states you can assist with.
Yeah, best number is my office line. That's 208-955-1262. And I can personally help you in Idaho, California, Oregon, and Washington.
Awesome. And Movement Mortgage can help in all states, correct?
All 50 states. Yes.
All right. Awesome. All right. Well, thank you so much, Mike. I look forward to speaking to you again when you bring all the interesting and informative details to the table for us. Thanks,
You're
everyone.
welcome.